People worry that it's going to replace jobs, and I would say there are so many job openings right now still, and you're going to lose a lot of baby boomers shortly. A lot of high skill sets in the financial sector. How do you replace those people? Don't wait around for bad things happening. Don't wait around till you don't have any talent, in the pipeline. Take your people that are there now and enhance their capabilities and productivity. You can build your own AI, right? You can build your own model. You can put a moat around it in the sense of what data goes into that thing. And this is where some of the bigger companies like a JP Morgan would have proprietary information that they could build their models on top of, and it will tell them something unique and give them some kind of edge, whether it's in trading or whether it's in analyzing the stock market and so on. Gen AI is a different animal, right? And then so with that, that's more like a really smart, super helpful young person who's coming in to wants to do a great job for you, but you got to check their homework. Whatever is rules based in our business in the business sectors, things like regulatory issues, things like the law and legal or accounting, those are targeted areas for AI in which it will do extraordinarily well, because basically you can take the legal code for Illinois and stuff it in there. And then you can ask the AI or Gen AI, you can say, hey, look, you're an expert in Illinois tax law. What does this mean? And you'll get some pretty good answers to start. So that's kind of big picture stuff when we're looking at AI overall.
How is AI revolutionizing algorithmic trading and portfolio optimization?
What it does is it just enhances the speed at which you can transact. I would hazard a guess we're up to maybe 3 to 5 million transactions per second. And it's something like, algo trading is something like 65 to 70% of trading overall, of all of the stock executions that are out there. It's also creating some havoc in the sense that hedge funds basically are, buying one stock, selling another, right? And then leveraging that up pretty much. All right. Let's just use that as a generic example. Well, if they're picking the best stock in the sector and then they're selling the worst stock in the sector, that's basically what a hedge is to some extent. And a lot of firms engage in that type of trading, which is great. They make a lot of money doing it. But what's interesting is when a company misses on earnings, then this is where you get the volatility that's involved. They basically have to sell what they own as far as the stock goes, right? So they got to, sell that. They have to buy back the other stock. And then if the earnings miss was significant enough, their models may be telling them to sell the stock that they previously owned. So you get a 2x event going as far as the stock goes. I think NVIDIA is a great example of that when you had DeepSeek come out. And you had so many people long NVIDIA that we saw just incredible volatility. I forget what the intraday was. I think it was down 20% at one point. To me, that's emblematic of what goes on with the speed of trading, the speed of adjustments that is going on in these models. That they're pre-programmed, they're ready to go, they're searching for information, they comb through investor calls all the time. They're just hoovering up as much information as possible. And that's undefined data a lot, whether it's, Twitter, whether it's a video, things like that. And then they build that into their models and they execute with incredible speed. So that's generically, what I would say is really what's been changed over the last, 5 years as AI has gotten involved and people build their own models in AI to execute quickly.
What role does AI play in enhancing risk management?
This comes from the research paper that we put out on andrewbusch.com. But if you look at like NVIDIA has done some surveys about how AI has enhanced their customers. And of the respondents, almost 30% said it's increased their revenue 5 to 10%. Well, that's at the low end. There's some people say, 23% of the people that they interviewed said it increased it more than 20%. So now you're looking at what the potential for this thing is. And again, more context on this, and this should be shocking maybe to some people, but JP Morgan over the last 3 years has spent on average $16 billion a year on tech. And that's AI and cyber and risk management, right? So there's a lot of money that's getting pumped into this. And I think what's interesting to me is that, from a risk management standpoint, it really helps with identifying fraud. And I think that's really critical. Credit unions have a real problem with this overall. And I think that's one of the areas that I think is really important. So much stuff John has done online now that it's just, you have to have the capabilities of winnowing out fraud and figuring out what to do with it. Companies like DataTrace is an example of a company that can look at existing activities, financial activities and patterns to build models that can then really send alerts to the companies and saying, hey, take a look at this. This is unusual. So that's really important. Just by 2025, I think it's estimated that cyber criminals, it's going to be like a $10 trillion industry. So that's what we're talking about, the scale of the issue. And when it comes to AI, the bad guys are just getting started on it. So we know that there's going to be a lot more spend on this coming from financial companies.
How are AI banking solutions transforming the customer's experience?
UX is really important. AI and the bots that go on people's websites have really leveled the playing field to some extent for so many reasons. But if you think about it, a bot never gets tired, right? And it's 24/7. And what you do is you basically dump into these bots as much information that you think clients would want to have. It could be anything ranging from, how to open an account to how to transfer money and so on. That's all at their fingertips now, and they can plug that in. Stepping out of financial services, you think about manufacturing or think about, products that have to be assembled. You basically can put the whole assembly of a product in an AI bot, and it can walk you through the process of putting together something from IKEA or whatever. So that's really what has been super, helpful from a UX standpoint. And there are things that these AI and bots can do to help people save money, to look at their spend patterns and point out to them, hey, you're spending, this month you're spending, 20% more on food than you used to. Is that something that you're doing, on purpose, not on purpose, but is that because you're going to the grocery store or are you going out more? And then, it helps people who can, it can help people meet their financial goals a little bit easier too, if they utilize them. So there's a wide range of tools that are out there, and these are conversational bots. These are not stiff things that that used to be out there when it comes to this stuff. So these things are really, quite enhancing the user experience when they go to these financial websites.
How is AI helping with cost cutting?
From an efficiency standpoint, it's helping the financial sector recognize where inefficiencies are, essentially. And through that, it also is enhancing the productivity. As an example, when you onboard a new client, it's just so much quicker, so much faster than it used to be. And how laborious, whether that's in portfolio management or you're bringing a new client in, or whether it's just a banking client, but the process is so much easier for clients. So that's a great example. Anything to do with paperwork, anything along those lines in what used to be paperwork, now is just, it's just a lot more, you're automating basically simple and routine tasks such as, data entry and transaction processing. These are all things that are going to greatly enhance the financial sector when it comes to AI.
What are the main barriers to AI adoption in finance?
One of the problems that the initial programs had, or the AIs had, was that they were skewed against people with low incomes to some extent, minorities is another. Basically kind of created a artificial AI red line as far as banks lending. You have to be careful about what the parameters you put into these things. Otherwise, you'll get the outcomes that are not really what a bank should be doing or what a financial services firm should be doing. And it's excluding people who really should be able to get access to those services. There's a lot of regulatory issues surrounding AI overall, in the sense of, can it be utilized in a way to avoid some of the regulations? Regulatory agencies like the SEC and CFTC are woefully behind. Having worked at the CFTC and a regulator overall, I'll tell you, these agencies have a lot of hardworking people, but my my goodness, they're typically at best 3 years behind the technology that's out there. Markets always run around whatever the regulatory bodies are. And they're so much faster and able to adapt so much quicker, and literally are just so much faster and far ahead of most regulatory bodies. So, and that includes the Federal Reserve as well. So I just think those are, like, if you're trying to regulate this thing, I mean, that's probably one of the bigger challenges. And it gets to, like, can we get a rogue AI going in which they've lost control of it? Now, we've had that quote unquote fat fingers thing, but if one of the issues that will come up is with fake news, right? If, and I'm trying to remember a good example. There's been a bunch over the last few years, but somebody broke into, I believe it was AP, and put out a notification that I think it was the US was bombing somebody, or someone bombed somebody else through the AP wires, right? And so the risk is that if your model is tied to news flow, which most of the models are, and you get a reputable source like Associated Press, and they put out something that's wrong, all of a sudden everybody's going to go berserk on this thing and react really quickly. And obviously that's where some of the risk is when it comes to using models that are based that way. Still need a human somewhere in that process to kind of analyze what's going on in real time and just check to see, if that makes sense at all, or if there's, something that seems wrong overall, especially with news flow and fake news.
How does AI contribute to financial inclusion?
It's just expanding the universe, right? And I think many people look at Africa as one place, specifically with mobile banking and the use of, your phone, but it's just getting so much more interesting. I mean, microloans are a good example of that. The ability to take a look at and analyze a region and a group of people within that region and what they're trying to do, what they're trying to accomplish as far as why they're asking for the loan, what's the capability of them paying it back. I mean, you're getting enhanced capabilities and skills and knowledge to provide that for an underwriter, as an example. And so that's where I think the inclusive aspect of this comes in, but it's not just in Africa. Obviously, it can be in a wide range of underserved areas, even in the United States too. So that's kind of, the credit assessment, I think, is really, really, really helpful when it comes to facilitating things like microloans.
What future do you see for AI in green finance?
Green finance has kind of gotten a snub now because of what's happened with the Trump administration, obviously, and the reduction of anything to do with, the Inflation Reduction Act, a lot of the problems that are there. It doesn't mean that the capabilities aren't going to be there. What we see as a strong potential is to further enhance the capabilities of finding out where there's good opportunities to lend into. Obviously, that's where AI can really do a lot of sorting quickly. Private credit has grown rapidly in a lot of different areas, obviously, and that's in the United States, but outside of the United States. And so as private credit starts to look into a wide range of different areas, green lending is challenging because it didn't really reward people for what it promised. Doesn't mean it can't do it. I would just say this when it comes to green environmental things, that nothing is going to happen during the next 4 years when it comes to this from the United States. And even Europe is going to pull back from them. So in other words, things are going to get worse as far as climate goes, right? In other words, no one's going to do anything about the greenhouse gases that are in the air and potentially making more volatile storms. So what does that mean? Well, it means there's a lot of things, there's a lot of opportunities from that. And one of the ways that I would see that AI would be able to help and enhance that is taking a look at, hey, show me areas of the United States that need serious resiliency when it comes to water. A good example is where I live. I live in North Carolina on the western side of the state, and it was devastated by Hurricane Milton. Could AI have helped with that? Well, maybe, as far as like some of the weather predictive models that are out there, absolutely. But also, it can analyze and take a look at like, well, okay, what happens if you get 48 hours of rain? Where's that water running off to? Are there opportunities to invest in companies like who are building, I don't know, say reservoirs to hold water? Are there people involved in infrastructure build outs to channel that water? Are there people involved in looking at power grids and the building of the trestles, and how does that work? So there's a lot of opportunities there as far as I'm concerned when it comes to AI in green stuff. You got to use a really broad kind of brush stroke with that to get at the heart of it. A lot of people are just go, oh my gosh, green, don't even talk to me about that. I've lost so much money with ESG. And I totally understand that. But expand the universe of what that means, right? So if we're talking about, and this is what I try to help clients see through, is like, hey, look, there's a lot of opportunities here. You may not get funding from the federal government, but state and local may, it's getting pushed down to those levels. And if you can make them more efficient, if you can help them avoid disasters, then you're going to make a lot of money with the companies that are providing those services.